In the nation's financial center, an existential crisis is unfolding. For years, New York City has been the undisputed capital of global real estate and finance. Now, the bedrock of its economy is under threat. A sweeping new political tide, led by Democratic socialist Zohran Mamdani, threatens to fundamentally reconfigure the city's economic landscape. Rent controls, increased corporate taxes, and more government involvement in housing development. These are the pillars of an agenda that many real estate investors and business leaders fear could trigger a major, irreversible downturn. Is this simply overhyped fear-mongering from entrenched business interests, as some analysts suggest? Or are the policies proposed by the city's clear mayoral frontrunner truly a dagger aimed at the heart of the New York housing market?
Tonight, we investigate the Mamdani effect, examining the tangible warning signs already showing in the suburbs, the cautionary tales from other progressive-led cities like Chicago and Los Angeles, and what a fundamental shift in New York's governance could mean for the entire country. The rise of Zohran Mamdani marks a significant political moment, winning the Democratic primary and becoming the expected next mayor of New York. His victory signals a demand for equity through sweeping housing reforms and tax policy shifts. For the commercial real estate industry, this is not a policy debate, it's an existential crisis. The fear is that his agenda will feel like uncharted territory and precipitate an outflow of investments from the nation's financial center. Real estate mogul Grant Cardone, a close ally of President Donald Trump, did not mince words, warning that if Mamdani gets his way, New York's going to turn into a museum. All history, no future.
Well, look, man, this guy's going to gut New York City. There's already been $14 billion lost in that city. $500 million of it came from me. We were going to do projects there back in New York last year. And when we saw this starting to happen, we pulled out.
Cardone argued that the attempt to legislate prosperity by punishing the people who provide housing is insanity, claiming that investors are already pulling out. The policies, which aim to make housing more affordable for working-class and immigrant communities, are, by design, unpopular with the city's wealthy and upper-middle-class residents. The core issue for high earners is the pledge to increase taxes on the wealthy, a move that is pushing them out of the city and into lower tax areas, seeking escape routes. This political shift has already yielded a tangible impact outside the city limits, an effect local realtors have dubbed the Mamdani effect. In Westchester County, a leafy suburb north of the city, real estate agents reported an uptick in interest following Mamdani's primary win in June. The data is stark. Contract sales in Westchester County are up 15% compared to the same period last year, a clear correlation local agents attribute to the Mamdani win. Buyers are drawn by a better quality of life, greater space, lower crime, highly rated public schools, and often lower effective taxes. The rise of remote work also means daily commutes into Manhattan are no longer a barrier. The movement of affluence is not confined to the suburbs. Wealthy New Yorkers are also eyeing properties in Palm Beach, Florida, a move driven by a desire to avoid high-earner taxes and seek a better lifestyle. This immediate flight is amplified by the fear of Mamdani's proposals, such as a rent freeze, which has already led to buyers in the $3 to $5 million price range pulling out of sales shortly after the primary. The concern is magnified by the political track record in other major cities. Progressive concepts involving real estate have proved difficult to enact or follow through on in Los Angeles, Boston, and Washington, D.C. This national conflict between progressive politics and the commercial real estate industry is now centered on New York,
where the stakes, given its global financial status, are arguably the highest. We turn first to Chicago, where former teacher Brandon Johnson became mayor in 2023 on a distinctly far-left agenda. The city's business community immediately feared his tax initiatives would stifle growth in key areas. Johnson's short tenure has become a cautionary tale for New York. His sweeping ideas, from raising real estate and corporate taxes to funding social initiatives, have largely failed to translate into concrete policy. The resistance was active and effective, driven by organized real estate and business advocacy groups, compounded by the mayor's historically low approval rating. The highest-profile defeat was the Bring Chicago Home initiative, intended to address homelessness by more than tripling the transfer tax on commercial property and home sales over $1 million. Opponents sued to block the ballot measure, arguing its structure was unconstitutional. Though initially blocked, the case eventually went to the voters in March 2024 and was rejected, dealing Johnson a major setback. Other tax proposals, a $300 million property tax hike, and a corporate head tax met similar fates, rejected unanimously by the city council and by immediate opposition from the state governor and the Chicagoland Chamber of Commerce. However, it's not all failure. Mayor Johnson has found support for a plan to commit tax dollars to subsidize the conversion of outdated downtown office space into apartments, provided at least 30% are affordable units. This points to a potential path for Mamdani, working with developers to convert struggling office space, an issue New York is also facing. Moving to Los Angeles, Mayor Karen Bass, who focused on a housing-first agenda, has struggled with the voter-approved Measure ULA mansion tax. The tax, despite falling short of its $1 billion annual projection, is blamed for curtailing deal activity, driving investors away, and causing a sharp drop in permits. Despite streamlining affordable housing processes, such as Executive Directive 1, which has resulted in the approval of an astounding 29,000 affordable units, critics say she has failed to reverse the city's reputation as a risky place to invest. Boston Mayor Michelle Wu offers a final perspective. She dramatically raised the minimum affordable housing requirement from 13% to 20% of units in new buildings and hiked developer fees. These mandates have caused some developers to pause or scale back projects, with many arguing that the numbers just don't work, making Boston less attractive to investors. Wu's rent control proposal and her push to raise the commercial property tax cap were both stopped at the state level amid strong industry opposition, mirroring the political roadblocks encountered in Chicago. But Wu also offered a massive carrot, a program offering developers steep property tax discounts up to 75% off for nearly 30 years to convert empty offices into housing. Early conversions are already underway, pointing to a more mixed-use future for downtown Boston, demonstrating that the carrots can temper the sticks. Finally, Washington, D.C. Mayor Muriel Bowser has consistently championed rewards for developers that convert empty office properties and offers tax incentives that have 8 projects underway. D.C. shows that an active, pro-business mayor can effectively navigate a decade of urban challenges even while encouraging housing reform. This brings us back to New York. The anxieties are about Mamdani's intent to abandon carrots entirely for sticks, an approach characterized by critics as anti-capitalist. The sheer scale of the investor flight, particularly the Mamdani effect on sales and the desire to avoid high-earner taxes, proves that the narrative of the city's leadership is as crucial as the final policy. For New York, the fear is that the doom and gloom predictions will be realized, leading to a major downturn in property values and a permanent shift of business investment to other cities. The ultimate goal of Mamdani is clear: to deliver housing affordability for the working class who have suffered from decades of rising rents. But the proposed tools, particularly the rent freeze, directly threaten the profitability of housing supply. If developers cannot make money, they will not build, and housing scarcity will only worsen. The lesson from Chicago is a potent reminder. Even with a mandate, raising corporate and real estate taxes can be effectively neutralized by organized business groups and the legislative process. For Mamdani to succeed, he must find a way to work with the business community, not against it. The office conversion programs in Boston and DC are a clear blueprint for this cooperation. New York, struggling with a glut of empty office space, has a prime opportunity to emulate these carrot programs, offering tax breaks to turn vacant towers into affordable housing. If he cannot find this balance, the financial consequences are severe. A sustained outflow of high earners would shrink the city's tax base, making it exponentially harder to fund the very social initiatives that define his platform.
This dynamic is the hard reality that has stymied reforms in every other progressive-led city, proving that governing a major metropolis is a complex political tightrope walk. To truly translate his ambitious campaign into lasting, tangible policy, Mamdani needs more than the primary upset. He needs a cooperative legislative body and a strategy to mitigate the organized, well-funded opposition of the commercial real estate industry. If he fails to secure this legislative and industry buy-in, New York risks seeing its progressive shift result in an economic standstill where investors flee and construction halts. The arrival of Zohran Mamdani in City Hall signals a major change in the direction of New York City, one that firmly prioritizes social equity and housing reform. But the path is fraught with difficulty. The lessons from Chicago, Los Angeles, and Boston are clear. Translating ambitious progressive policy into reality is often far more elusive than anticipated. The evidence of the Mamdani effect, from the 15% jump in Westchester sales to the sudden halt in high-end city deals, proves that the fear of Mamdani's ultra-progressive platform is already impacting the market even without a single law enacted. The future of New York now hinges on one question. Will the city's new leader learn from the costly setbacks of his peers, employing both the sticks of regulation and the necessary carrots of incentives, or whether New York will become the next major metropolitan area where political idealism meets the hard, unforgiving reality